Back to inflation, as we said, rising more than expected in May to 8.6 over a year ago, highest since 81. Joining us for the first response from the White House and the administration, National Economic Council Director Brian Deese. Brian, good morning. Good to have you.
It's good to be here.
Watching headline, but also watching core. 0.6 is the same as 5 of the last 8 months. Year to date, average gain is only 0.5. Is the view from the White House that core may actually be reaccelerating?
Well, look, I think the news today underscores the importance of what the president is doing, which is identifying and fighting inflation as the top economic priority for the country right now. Certainly, it's heartening to see some moderation on annual core. And so we will keep a close eye on that. And obviously, there's a distinction emerging between core CPI and core PCE. But at the end of the day, what we saw in May, we didn't need this report to underscore, but what we know in May is that energy prices have driven up the price at the pump for families and consumers, and the price of fuel oil and natural gas is working its way through the economy and affecting elements of the core as well. We see that, for example, in airline prices. So that is our challenge. That is our focus. And the issue now is how can we actually make progress on concrete steps that would improve that? We're very hopeful, and we're calling on Congress to move on shipping legislation that would bring down the cost of moving goods overseas. We talked to a number of CEOs over the course of this week that say that would be a game changer in terms of them not having to pass on those prices to consumers. And we're also focused on how we can lower the deficit so that fiscal policy can be complementary to what the Fed is trying to do.
Right. I don't know if you've been able to catch any of our programming this week, but it seems like at the top of every show, we talk about what outreach from the White House to the oil industry would mean in lowering energy prices. We've talked about this before. Why haven't you had more direct conversations with oil executives about production, or have you, and we just don't know about it?
Well, I did hear some of it. I heard Jim's commentary as well. We've had conversations, including this week, with CEOs of oil companies, and we will continue to do that. Look, we operate in a market, a global oil market, and then a market for refined product as well. And there's a very strong market incentive right now. But we should start with some facts. Highest natural gas production in the United States ever happening right now under President Biden. We're about to hit the highest oil production levels ever under President Biden. We have real challenges, and part of it is that the oil industry, the refinery industry, took 800 million barrels a day of refinery capacity offline before this president took office during the pandemic. And so right now we are short refinery capacity because of those decisions. Those decisions were decisions made by those companies as fiduciaries. And now we need to work on what we can do to actually get more capacity and more product onto the market. But I want to be very clear. Any constructive step that would actually help in the very immediate term to try to bring more refinery capacity online, get more output out of refineries. We have put that request directly to companies. We'll continue to do so. If there's any practical step from the government's perspective, we stand ready to do that.
Well, Brian, look, you're a realist, and I appreciate that. We have to go brown to green first. The great Larry Fink, who I really love, has really outlined a path. And you know what? You haven't done it. You haven't just said, okay, listen, guys in the Permian, oil's at 120. We know that you're returning a lot of money to your shareholders. We need you to do what's right. In return, we know you need pipe. We know that natural gas would come down dramatically if they had enough pipe. I love your number, but your number's about the amount of pipe. Even if we just decide that we can keep the price of oil down by actually exporting it and get oil down in the future, you know, it's a win for you. But what are you afraid of? Are you afraid of being seen with guys who are involved with fossil fuel? Are you afraid of the president going to Permian rather than Saudi Arabia? Come on, man. Come on. You know the real.
Look,
you know the real.
Look,
you know what has to be done.
Look,
you're a realist.
Let me just tell you what the president has done. The president traveled to Europe and he said, I am going to increase natural gas exports to Europe. Over the course of a couple of months, what has happened? Natural gas imports out of the United States are up 20%. The share of U.S. natural gas going to Europe has doubled. That's happened over just the last couple of months because the president went out, said that to the world, and in fact, right now, the reason why natural gas prices are going up is because we have dramatically increased exports of natural gas. That's what's happening right now. The price of natural gas is going up because those exports are increasing. So we are acting and we are communicating that we're prepared to do things in the immediate term. And at the same time, to your point, there is a transition. The market is driving it, and we are going to take steps to encourage that. But we're practical and pragmatic about this. But it's also important that we look at what's actually happening. Natural gas is a great example of that.